Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Here's your weekly deal watch with 11 deals closed. Last week was the busiest so far this year for M&A deals involving publicly traded cannabis companies. 7 of the 11 deals involved plant-touching companies, with the remaining transaction in the ancillary products and services segment. Top raises that closed last week include Los Angeles-based vertical companies, closed a $58 million Series A fund. WeedMD, a Toronto-based cannabis producer and distributor, closed a debt financing of $39 million. Massachusetts-based Curaleaf closed a $30 million acquisition of Eureka Holdings. Canada just approved another cannabis exchange-traded fund focused on cannabis companies. The Horizons ETF Management, the Canadian exchange-traded funds issuer behind some of the country's largest cannabis ETFs, is introducing a fund focused entirely on U.S. marijuana companies. The Horizons U.S. Marijuana Index ETF is expected to begin trading on Canada's NEO exchange on April 18th under the ticker HMUS. Horizons is the company behind Horizons Marijuana Life Index, which is one of the world's largest cannabis ETFs. HMUS will be the first ETF in the world that solely focuses on providing exposure to companies with significant business activities or significant exposure to the United States marijuana or hemp industries. The index's 25 components are equally weighed, and the benchmark is rebalanced on a quarterly basis. Familiar names in the index include Curaleaf Holdings, Cresco Labs, CV Sciences, and TerraTech Corp. While some securities may be listed on the North American exchanges, the majority of those securities currently trade on North American exchanges that included, but are not limited to, the Canadian Securities Exchange and NEO. Evolve Funds Group, a rival to Horizons in the Canadian cannabis ETF market, is also looking to launch a U.S.-focused marijuana ETF that would trade in Canada. Other U.S.-based ETF issuers have filed plans to list cannabis ETFs in New York, but due to marijuana being illegal at the federal level in the U.S., there are regulatory hurdles associated with launching cannabis funds in the U.S. There's another cannabis ETF called YOLO, which cuts the price needed to invest in cannabis. A new exchange-traded fund focused on cannabis stocks plans to undercut competitors when it debuts just days before its unofficial cannabis holiday on 4/20. With the ticker symbol of YOLO, you only live once, the advisory shares pure cannabis ETF will charge 74 basis points or $7.40 for every $1,000 invested, according to regulatory documents. That's 1 basis point less than the ETFMG Alternative Harvest ETF, known as MJ. The fund is poised to make history as the first U.S. ETF to include cannabis in its name. Issuers have struggled to start funds that directly reference marijuana, in part due to concerns among custodians and other service providers over the legality of the business. Bank of New York Mellon will act as YOLO's custodian, administrator, and transfer agent, according to regulatory filings. The fund plans to list in New York on Thursday, just 2 days shy of April 20th. A cannabis real estate investment trust deepens the California exposure with $27 million property acquisition. Innovative Industrial Properties, the first and only real estate company on the New York Stock Exchange focused on the regulated U.S. cannabis industry, announced that it closed on the acquisition of a 5-property portfolio in Southern California, which comprised approximately 102,000 square feet of industrial space. The acquisition marks their second investment in California, focusing on Sacramento earlier this year. The purchase price for the California portfolio was approximately $27 million in the aggregate. The operator intends to continue to operate the property as licensed cannabis cultivation, manufacturing, processing, and distribution facilities in accordance with California regulations. Last week, one deal that seemingly surprised Wall Street and investors was the national tie-up between New Age Beverages and the largest private employer in the world, Walmart. According to the Monday morning press release from New Age Beverages, Walmart becomes the company's first national account. The retail giant will be carrying a full slate of Marley product brands, including organic Marley Mate and Marley Cold Brew. According to a recent report from food and beverage consulting firm Zenith Global, worldwide sales of CBD and hemp-infused drinks are expected to hit $1.4 billion in 2024, up from just $89 million in 2018. That's a substantial growth, and it's bound to attract companies big and small. Just today, Carl's Jr. announced that they were going to have a CBD-infused burger. So we'll see how that goes on 4/20. It'll be launched in Denver for $4.20. Of course, it's called the Mile High Burger. In October 2018, Bloomberg reported that Walmart was tinkering with the idea of selling CBD products in Canada in over half the country's pharmacy aisles. At the time, Walmart Canada spokeswoman summed up that there was no firm plan in place to carry CBD products, but that Walmart was conducting some preliminary fact-finding on the issue. What's more is the Marijuana Business Daily reminded everyone in October that Walmart already sells hemp oil products online. Not only that, but they're selling rosin presses and all kinds of ancillary products as well. So they've been in the game for a little bit longer than people may realize. Why is legalizing cannabis proving so difficult in the United States? The marijuana industry has appeared nothing short of unstoppable on a global scale in recent years. To our north, Canada became the first industrialized country in the world to legalize recreational cannabis last October. Meanwhile, to our south, Mexico gave the green light to medical marijuana in June 2017. Nowadays, there are more than 40 countries worldwide that allow a physician to prescribe medical cannabis in some capacity. And yet, in the US, it's truly a mixed bag. On one hand, you have an all-time record of Americans at 66% now favor the idea of nationwide legalization. We've witnessed this support translate into 33 states having legalized medical cannabis, 10 which also allow adult consumption. If cannabis were entirely legal in the US, as in Canada, it would almost certainly be the most lucrative weed market in the world. So why is legalizing cannabis in the US so tough? First, we could state the obvious that to support for legalization, it really depends on the party preference. And right now, there's simply no pressing need to push for legalization, even with the American public firmly in favor of cannabis reform. Cannabis right now just isn't polarizing enough topic yet to sway voters. Third, and maybe the most important because everything revolves around money, is that legalization creates a money problem for the federal government. As a Schedule I drug, businesses that deal in cannabis are disallowed from taking normal corporate income tax deductions per Section 280E of the tax code. With only cost of goods sold able to deduct from the revenues, most profitable cannabis companies pay a very high effective tax rate. So if cannabis were suddenly legalized, it would no longer subject these companies to Section 280E, thereby costing the federal government about $5 billion in tax revenue over the next decade. And with that, we're going to roll this one up. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't, and I'm out.